EMA trading with CCI and RSI filter. This strategy is very simple and easy to use. So, you only need to follow the rules to earn pips every day. In this video I will show you how to identify the strongest and most profitable trends to trade. As always, this video provides a clear, winning, step-by-step guide to how to successfully trade in the forex, stocks, commodities, or any financial markets and generate consistent profits. So, by the time you finish this video, you'll know exactly when to enter high probability trade using the exponential moving average indicator. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. 80 period and 40 period EMA trading strategy with CCI and RSI filter. EMA is very common tools to all traders. There are many strategies by EMA. However, this strategy is very simple and easy to find trading opportunities for all kind of traders. New traders do not need any analysis for applying this strategy. They need to follow the rules of this strategy and they earn pips easily. So, what is an exponential moving average, or EMA? An exponential moving average, or EMA, is a type of moving average that places a greater weight and significance on the most recent data points. The exponential moving average is also referred to as the exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average, or SMA, which applies an equal weight to all observations in the period. Why 80 period and 40 period exponential moving averages? The 40 period and 80 period exponential moving averages, or EMAs, are often the most quoted and analyzed short-term averages. In general, the 40 period and 80 period EMAs are used as indicator for long-term trends. So, when an asset price crosses its 80 period moving average, it is a technical signal that a reversal has occurred. Traders who employ technical analysis find moving averages very useful and insightful when applied correctly. However, they also realize that these signals can create havoc when used improperly or misinterpreted. All the moving averages commonly used in technical analysis are lagging indicators. Consequently, the conclusions drawn from applying a moving average to a particular market chart should be to confirm a market move or to indicate its strength. The optimal time to enter the market often passes before a moving average shows that the trend has changed. Like all moving average indicators, EMAs are much better suited for trending markets. When the market is in a strong and sustained uptrend, the EMA indicator line will also show an uptrend and vice versa for a downtrend. The best RSI and CCI combination for optimum returns. Relative Strength Index, or RSI, and Commodity Channel Index, or CCI, are some of the best trading indicators for automated trading as well as manual trading. Technical analysts, as well as forex robots, use the two indicators to ascertain market momentum, as well as identify ideal entry and exit points. While the two forex charting tools can be used on their own in analyzing chart patterns, they are often used in combination for the best outcomes. Understanding RSI indicator. The RSI indicator is simply an oscillator that oscillates between two extremes of 0 and 100. The indicator stands out as one of the best trading instruments on the fact that it provides information on overbought and oversold market conditions. Conversely, whenever the RSI reading is above 70, the same is interpreted as overbought market condition. In this case, forex robots or traders refrain from taking long positions, as the likelihood of price reversal is usually high. Similarly, whenever the RSI reading is below 30, the same is interpreted as an oversold market condition. In this case, the likelihood of price reversing and starting to move higher is usually high as the underlying asset is usually considered cheap. Understanding CCI indicator. The Commodity Channel Index is an important charting tool that measures the current price of a security relative to its average price level over a given period. The indicator's reading tends to be relatively high whenever the prevailing price of a security is far above the average. Similarly, the reading tends to be low whenever the price is far below the average. Just like the RSI indicator, the CCI indicator can be used to ascertain overbought and oversold market conditions on given security under study. Whenever the CCI indicator reading is above plus 100, the same implies a strong uptrend is beginning, signaling overbought conditions. In this case, traders should be wary of entering a long position as price tends to have a tendency of reversing. Similarly, whenever the CCI reading is below minus 100, the same implies a strong downtrend. In this case, expert advisors or manual traders enter long positions to take advantage of potential price reversal as a security is considered to be oversold. 80 period and 40 period EMA trading with CCI and RSI filter. In this strategy, the 40 period and 80 period EMAs are used as indicator for long-term trends. We use the 80 period and 40 period EMA to compare where the current price of the underlying instrument is in relation to support and resistance on a chart. When price moves down to the 80 period and 40 period EMA zone, or up to the 80 period and 40 period EMA zone, traders can use this as a signal that price might stop or retrace at that point. For example, if price moved up to the 80 period and 40 period EMA zone, a trader might think that price might stop moving up from there, as the 80 period and 40 period EMA zone will act as resistance area for price to move back down. RSI and CCI indicators are commonly used in scalping as well as trend trading and swing trading, given their ability to identify oversold and overbought market conditions. Similarly, when used together, be it in automated trading, algorithmic trading or manual trading, the indicators help shed more light on ideal price targets for opening and closing trades. To use the two indicators, firstly, tweak the RSI parameters to a 30 period RSI in place of the default 14 period. The change in settings helps insulate against short-term price fluctuations that can be misleading. Similarly, add a 50 line on the RSI indicator, in addition to the default 70 and 30 trend lines that indicate overbought and oversold conditions. When it comes to the CCI indicator, it would be wise to stick to the 20 period CCI, as it tends to be more immune to short-term price changes that can be misleading. The overbought and oversold limits at plus 100 and minus 100 should remain the same. Buy setup while using EMA, RSI and CCI indicators. A trader should only consider entering a long position or buy when: first, the 40 period above the 80 period EMA. Second, the 30 period RSI reading is above 50. Such a reading indicates an underlying upward momentum in the price of the underlying security. In this case, traders should only consider long positions. The 80 period and 40 period EMA zone and CCI indicator will, in this case, help in generating signals for opening long positions. For a buy signal, first, when price moves down to the 80 period and 40 period EMA zone, traders can use this as a signal that price might stop or retrace at that point. Second, turn to a 20 period CCI and look for when the indicator crosses minus 100 from below. Whenever this happens, then it would be wise to enter long positions. A stop loss can be placed a few pips below the swing low. Sell setup while using EMA, RSI and CCI indicators. A trader should only consider entering a short position or sell when: first, the 40 period below the 80 period EMA. Second, the 30 period RSI reading is below 50. Whenever the 30 period RSI indicator is below the 50 line, the same indicates the underlying price has turned bearish and that price is likely to continue edging lower. In this case, traders should only consider short positions. A signal to enter short positions will happen when: first, when price moves up to the 80 period and 40 period EMA zone, traders can use this as a signal that price might stop or retrace at that point. Second, the 20 period CCI indicator crosses the plus 100 mark from above. A stop loss can be placed a few pips above the swing high. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Here are other examples of the 80-period and 40-period EMA trading with CCI and RSI filter to fully understand this wonderful strategy and to make the most out of it. RSI and CCI are some of the best trading instruments given their ability to shed light on overbought and oversold conditions. When used together with exponential moving average, the RSI and CCI indicators can aid in ascertaining ideal entry and exit points, perfect for mitigating losses and optimizing profits. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.